say, tell me what's your next product launch, then I'm going to skip past that question. Yeah. So just so that it's easy to follow for people, I'll only look at questions that are relevant to the area that we've just covered, and then we'll have a very sort of open forum. If you're new to MDB, if you're new to me, I suppose as a character and a person as well, I'm very candid. And I certainly have a certain style about me, which sometimes works and sometimes maybe needs a little bit of finesse. But I'll always be honest, right? Or as honest as I certainly can be in any situation, whilst remaining as professional as possible. But yeah, if you want to ask any question, then we'll have an open floor, get the questions out, and really this session is just about having an icebreaker, giving you guys some information, giving you an opportunity to ask some questions. And I hope many of you obviously stayed with the protocol for a long time. So just whilst I was doing the introduction, we also sort of added another 16 people. So I will crack on. So first, introductions in terms of me, the team, and the background of the protocol. This is my first. I always say actually, this is my first and my last DeFi protocol. My goal is to be a one organization man. My background is spread across sort of like real life business. There's going to be some more announcements coming out actually in the next few days with some websites and LinkedIn profiles and things like that to give you guys a bit more information. But to give a quick summary of my sort of like business experience before this. I started off very much in very small companies early on in my career, then went and worked in the corporate world for about 10 years across different businesses. So I've worked for, I've mentioned some of the names before, so I don't mind sharing. I worked for DHL in their supply chain division for a while. I worked in the industrial space for a company called Electro Components for a number of years, and then I worked for a global energy and sustainability leader called Schneider Electric. I worked for those guys for just over 4 years across 2 different roles. I in commercial leadership roles, restructuring roles, and then I ran their electric vehicle charging business across 3 markets for a couple of years. And then very, very, quite frankly, not feeling particularly challenged and quite bored and of corporate life, I went back into the startup world, took a software business, a technology business who provide management systems into the additive manufacturing space, from relatively small organization up to still a relatively small organization, but we scaled the business from a handful of employees up to sort of 60, 70 employees, and then sort of 100 million plus valuation. And just as that process was ending, I suppose I'd had the idea for MDB for a while, and MDB really is the answer to is an answer to a problem that I see within the space where protocols and projects are designed with inherent, which is why there's such a high failure rate within the industry. And I think some of those risks of the team, I think that was the number one risk that we identified, is the capability of the teams and devs and their processes and contingencies and things like that. Also, the tokenomics quite often, very Ponzi-nomic, and an AMM is a Ponzi, right? But that's what most mainstream finance applications run on. But so we basically took all of these things into account, the relationship between larger investors and smaller investors, and how that can also then wreck protocols as well. And we basically designed MDB. We've got so we had several core founders, and then we've built up a team as well. So in total, I think the team is around 7-8 people. So we've got people that run the Discord. We've got operations leader, which is Harley, who's part of Obsidian. Actually, he's been with us for a while. We've got sort of head of treasury, finance, CFO, which is Adam, who's been with us for a little while now as well. Our CMO, many people know in the industry, is Mina, or real world is Alice. My real name's Danny, by the way. We are doxed, and that's kind of the team. I'm just going to have a look in AMA questions now, because if there's any sensible questions, which with our community often there isn't, then I'll answer some of those questions now about the team before we then go into the protocol. So what is MDB after dark? It's not a sensible question. Yeah, really good question. Look, what's the project business model? I think I don't know if it's hybrider. I think is that how you would say it? Hybrider. Um, Feel free to correct me on that. Yeah, we'll cover that in a second. I'll walk through sort of the protocol, the way it's designed. I think just to share with you on a personal level, I I quite frankly, I wouldn't be able to run most of the projects in this industry. I wouldn't be able to put my head down on the pillow at night, knowing that I could wake up in the morning and it's over, it's done, right? And so I took that on board when designing the protocol. And basically, we've got a system that obviously the price can go up or down, but actually, if you see really aggressive movements up, then that generates a bit of risk, right? Because the further you go up, you can also come down. But there's also, revenue that's generated by the protocol as well as external revenue streams through that process. But we also design a protocol whereby actually it can run just on itself. In fact, it doesn't need the external revenue streams. They just help. If the protocol died 90%, then it would be able to buy so much of its own supply for such a small percentage of its treasury that ultimately the backing of each of the tokens that's left in the ecosystem has actually increased exponentially. So that we call it capital synergy. That is really what MDB is built on, which is this philosophy of capital synergy, which acts as both an engine for the protocol, but it also acts as this huge insurance policy. It's very difficult, we've been in the worst crash, many projects failing. It's very difficult to kill MDB. A lot of things would have to go horribly wrong, even the end of probably Binance itself, or some team capitulation to kill MDB. Which next question, Austin's sending me threatening gifts, which is not unusual, so we'll just move on. And let's have a look. Another question from Hybrider. I feel like we should do like a one-on-one interview because you're very inquisitive. I love it. So, are the devs working on the code? Were docs are the members including their? Is this a question regarding 100 days? So the developer, so we manage all of our contracts in house. But our code is written by an external company and they're registered LLC in the US. So hopefully that answers your question. And I think that's all of the questions kind of around the team. We'll move on to the next section. So I think you've teed it up very nicely actually. And what I'm going to do is I'm going to just snippet some parts of our Xenia ecosystem and then just walk through what is MDB in the ecosystem. Okay. So I'm just going to share first of all. So if nobody's been to our website, the website is mdb.fund. If you go into the D app, that's where you can see all staking, farming, tokens, and our stable-backed assets, as well as NFTs and any rewards from NFTs, albeit all NFTs that have been released have been minted out. So I'm just going to share. I'm just going to share the like, this isn't about you, Alice. About you. Stay out of it. You can be bothered. I'm joking. She has children. She has children. They're my children as well. That sounds really harsh. Anyway, this is getting really messy. So let's get back on track. So if you look at MDB, so when we launched, actually, we didn't have Xenia as a platform. It was in our roadmap. We had a really clear roadmap for 6 months. We crushed the roadmap. If I'm objectively speaking, we absolutely ruined the roadmap. We delivered almost everything early. We even launched MDB itself early as well, actually. I think the only hiccup we had was when we had to delay the pre-sale of Infinity by like 24 hours, and I got to see what the world's like when you don't deliver on your timelines for the first time. But other than that, everything that we've done, we've typically done fairly well, and we've delivered early. With obviously there's always some learnings along that journey as well. MDB as a token uses this model of capital synergy. So we went to the market, we raised 1.8 million, and we split that 1.5 million trust fund. So we don't call it a treasury, we call it a trust fund. And 300k went into the liquidity pool. Now, those capital ratios very specifically are designed, and we modeled this. We used 2 different teams actually to run models and work through how this works in practice. And ultimately, the way the system works is that if you were to see a huge crash in the price of the token, then The trust fund itself, which is invested in various investments, is all very public. We had an update 2 days ago, and we do a monthly update on all investments and performance, the good, the bad, and the ugly. We're very open about it. But earnings from the trust fund is then used to buy back and burn supply. So that the capital is injected into the LP the old-fashioned way. Tokens are bought, and then those tokens are burned out of supply. So you can see that in the early days, we launched just as Terra Luna kicked off. Price was low for a while. We were able to burn a really high proportion of supply, actually. So we're very, obviously we're built for long term, but at the same time, if the protocol sees value, i.e. an opportunity to scoop up some supply and take it out of circulation, really good value, then it will typically execute on that. It will also do regular small buyback and burns anyway, just to keep the ecosystem ticking over, but it's always sitting there. If we saw like a 70% dump in the price right now, you would see the protocol, trying to beat investors effectively, because by burning so much supply very quickly, what the protocol is actually doing is driving the value of it up per token. So that's the way the mechanism works. So that investment structure is there now. I think we've got about two. Depends, always moving with BNB and ETH and things like that. So today we've got around about 2.3 million in the core trust fund, and that's earning interest. Now the buy and sell tax, there's a 10% buy, 15% sell tax. Those taxes are split across 3 different ways. So the largest proportion of those taxes go into the trust fund as BNB and is then invested and then used for buyback and burn. Some of it is used for rewards. So all of the APYs that you see on the staking and farming on Xenia come from the buy and sell taxes, and then a small percentage goes into our marketing and operations, and we use that obviously paying staff, running marketing, and running the organization. And that's our strategy and the way we work. So that's really MDB. That's, it's a model that's designed so that you actually want to be the last holder, and that is a fantastic place to be. And you can then worry a little bit less about price movement up and down. Price is obviously relevant. It's much more relevant if you're looking to sell relatively quickly. But the idea of the protocol is that it reduces its supply over time. It raises the amount of funds that are available. You divide the funds in the protocol by the amount of supply, and each token in circulation is becoming more and more backed. That is our objective. That's what we live to do. Okay. There's a number of other revenue streams within the organization. So, for instance, we have multiple LPs, and then we arb across those LPs, which generates passive income for the protocol. Thousands of dollars a month. Actually, that's quite a successful endeavor. We have B2B services. So 40% of our LP is paired with MDB Plus, which is an ever appreciating stable backed asset, which is a fork of another token called XUSD, but we made some changes to that. We actually use the same developers, tweaked their contract, made some changes that we would like to see for ourselves, and then other organizations then use that pair as well. So if you Sphere sort of investor, you might know the sort of the Cone pool with USD Plus, MDB Plus. We've worked with EMP, we've used it as a mint currency, and then we use it for our own LP. And then we've got other partners as well that use it for their LP. So they contribute to the APY. So that also acts as like a revenue stream, if you like, for MDB, because it's always pushing up the value of the LP from underneath. And then we have B2B services as well. So we've got EMP NFT Mint in 12 days time. That is a full managed service from design through to mint that we're providing. And it's also a partner NFT. So the rewards that are delivered daily are actually used to buy and distribute MDB as well as the eShare token in that system. So it's a really clever one. But that's another revenue stream for us. And then we also have Gravity. So Gravity we designed before we launched. We did our first Gravity as we launched, actually, and that is a way that we see of being able to grow the community, grow the protocol. And basically my motivation for Gravity came because I've been in that situation at the end of a protocol's life, and I could see lots of really good things that were still there. And I want MDB to be something that is here for a long time, has a great future, it's really resistant to market turbulence to a certain degree versus other protocols. And in much better market conditions, I'd be very bullish about our outlook. But Gravity is about bringing people together and being able to offer a future where all else is lost, quite frankly. Okay. Good question there. So hi, Breeder question, what's the key difference between ours? I suppose, look, there's a million protocols out there and we could say what's the difference between MDB and every protocol. But yeah, if you kind of want to pick on one particular example, difference between ours and Sphere's business strategy, you are both deflationary, but you do it very different. Yeah, I think our starting position is completely different, right? So I think we were designing a deflationary protocol whilst everybody else was, getting off their heads on rebases, right? And people thought we were mad. And that's because we're building something that we see as long term. Now, one by one, almost every single one of those is either pivot into a blockchain or pivot into deflationary. And 100 days, obviously, was in a similar situation. So we from day one, the big difference is that we've always been deflationary, which means that we have always had a focus on reducing our supply as quickly as possible. And obviously the difference is that Sphere went through this increasing supply exponentially for a number of months and then deciding to try and reduce supply. So that's quite a pivot. It's something that I think a lot of people don't realize this. I knew this from the start. They'd always said that they were going to do that, and they sped up that process because of the market conditions. But obviously, their supply is very, very different. It's what else is different about us and Sphere? I suppose we're focused on like passive yields. I'd say that's a fundamental difference. So, for instance, I would say within the Sphere protocol at the moment, I know, they're utilities that are designed to achieve this, strategically is designed as a similar outcome. But for us, our strategy is to try and deliver returns to people now, as well as deliver that strategy very long term. And our utilities for generating revenue, and then I'd say our approach to burning is very different as well. I'd say Sphere is much more. I think the theory is systematic, using a bot, doing it in tiny amounts, but then the bot's on and then it's off for a month. So I'd say it's systematic, but also erratic at the same time. Ours is more tactical. So we try and pick moments to accumulate supply and burn it. And because of our utilities, quite often the protocol, if it wants supply, it has to go and buy it on the open market. At MDB, we don't have a secret wallet. We don't have non-circulating supply or anything like that. Any supply that you see that MDB holds of its own token, we've had to go and buy it, right? And that's a fundamental difference. So yeah, hopefully that gives a slight difference. I'd say we're much more aggressive. So we're thinking long term, but also, I don't want to wait for 2024. I want us to deliver the best results we can right now. So I'd say, I respect Sphere's position in terms of their treasury. As an investor, I would rather they were much more aggressive with it personally, and I'd rather all of the funds were back in the LP, quite frankly. So I think our approaches are different, our revenue generation is different, and we're both obviously got that goal to be deflationary. So hopefully that answers the questions whilst giving a bit more information on us as well. So loads of stuff jumping in, guys. You're not making this easy for me. I'm like on my own trying to talk and flick through the AMA questions, and then Alice comes in as well just to roll things up. Okay. Yeah, so yeah, we're moving through the protocol. So great question. Good questions coming through. So let's move through the protocol. So if you move down after MDB, the next token then in the ecosystem, and we say token because it's the other tokens are tokens, but they're 100% backed by BUSD, right? So they don't have the same upside potential as a token that's on a traditional AMM, but at the same time, they also they can't go down in value. It's mathematically impossible. So that's why we call Infinity a token, but we don't call MDB Plus a token in our ecosystem. So Infinity is like a super aggressive version of MDB, if you like. The Infinity Fund has a very different strategy. So MDB's fund is 2.2, 2.3 million-ish. The Infinity Fund today, the fund is about 1.3 million, give or take. The LP is much smaller as a percentage, which means that the prices can be much more volatile, and also means that you're able to burn that actually really quickly. You can see there that we burned 22% of Infinity. It only launched a month ago to the day, actually. 7.3% of that is organic burn. So we burned 7.3% organically in a really short space of time. That 1.3 million is really overburned. So actually, Infinity is like mega undervalued at the moment, because if we took out the rest of the non-circulating supply that we have, and you took out the LP, you took out the ops holding, I think we're probably getting close to about 90% market cap backed by real money, actually, with Infinity. So that's, whilst it looks quite low and it's sort of like, maybe it's not getting the volume that we would like, it's a very safe place to be at the moment. The downside risk is very small, the upside potential is huge. And something like 80% of the supply for Infinity is locked up in staking as well, actually. So hopefully that kind of tells you the key differences. Moving down through Xenia, you've then got MDB Plus, Phoenix Plus. MDB Plus is very simple. 1% tax in total, in and out. So 0.75 in, 0.25% out. And that feeds back into the LP. The LP is BUSD. It's locked in the contract. Nobody can get it out other than redeeming the native token MDB Plus. So that means that MDB Plus, number one, hard fact, sounds like a scam, I know, cannot depreciate in price. Mathematically impossible. Number two, it is and always will be 100% backed by a stable asset plus $1 at all times. So it moves a bit slower because, the gains are a bit slower, and we'd like people to move in and out of it more often, quite frankly, and we're looking at ways of achieving that. But it cannot go down in value. It's impossible. So if you've got any stables, if you want some free financial advice, stick it in our stable backed assets. If you go into Phoenix Plus, it's got higher taxes, but that also means that the APY is much higher, and we also have this ability to force a sell on Phoenix Plus. But it's called an Inferno. If you get randomly selected by the Inferno, which won't happen in the first couple of days of buying, that's kind of locked out. And your likelihood increases over time, but it's very low early on. And the idea is that you get cashed out into MDB Plus, which is also appreciating, but you can switch back. So we're launching an automated version of that next month. But for now, Phoenix Plus has a tiny downside risk. It's almost impossible to get the maximum exposure, but mathematically, your maximum exposure in Phoenix Plus is 5%. And then you get cashed out into MDB Plus and obviously pay the small tax going in there. But realistically, it's very hard to lose 1 or 2% in Phoenix Plus. But some people have gone, very long periods of time and made, one person, I think Dunpay made like 30% plus, just because he just kept missing the wallets are randomly selected. So if it gets you, it gets you. If it doesn't, it doesn't. Low downside risk, huge upside potential. Okay. With what I should say is that you can stake your Infinity and you earn MDB as rewards. It's 5% tax in and out. You can stake your MDB for no tax at all. And that staking pool is auto compounding. There is a 5% fee if you leave the staking pool, the single staking pool, within 30 days. After that, there's no fee at all. And you don't have to keep restaking. It will auto compound forever. And if you look at our staking, you'll see, 6 million of 9 million, 2/3 of our supply is in the single staking pool. So that gives you probably an indication of sort of like the long-term confidence of our investors, which is obviously reflected in the chart. And the last one is I want to cover with maybe a little bit less pace to it is the farm, because the farm isn't straightforward. So the farm has never been less than 100% APY since we launched it, maybe I think 2-3 months ago now. It's been as high as 300-400% before. It's dependent on volume and it's dependent on the amount of cash that's in there. So it's really like a self-balancing. The APYs in our system are all measurements of previous performance, not a commitment of future performance, but at least it is a very honest measurement, right? Because it's based on what's happened. If you provide B&B paired with MDB into the farm, you will pay a 15% sale tax on the MDB going in, but you won't pay a tax coming out. Now, that means that it's quite a high barrier of entry going in, but the rewards are very high. And I think the reason we like that design is because people won't go into the farm, provide liquidity for the protocol, and then speculate in and out of it all the time, which then gives you liquidity that's not very secure. So typically, if people go in the farm, they typically stay there for a long time. They earn fantastic rewards long term, but it's not something that you would speculate in and out of because of that 15% tax. But that also means that if you're in the farm, people aren't coming in and taking your APY and then, and then shooting off when times are tough and then popping in when times are good. Because of that tax, it means that typically your fellow investors in the farm are like you, they're thinking longer term, and that means that those rewards are being shared out nicely between people that are supporting that farm long term. Okay, so I've been looking at Xenia whilst I've been banging on for the last 5 minutes about all of that, and I will come back and just check. There was a couple of good questions actually. So I'm hoping dry responsibility 42. I'm hoping that answered a lot of your questions. Has the exchange rate of MDB and Astro token been made public? So we'll talk about the gravity process in a second, but we can't calculate the exchange rate. There's two things you need to understand before you can calculate the exchange. Well, it depends. We've given a fixed price of MDB, which you'll be happy to know is lower than what it is today by a nice probably 8 or 9% already. So we call a strike price at a certain point. And then, we accept risk as a protocol on that strike price. And obviously, there's a bit of risk for you. If the price dropped in that time, there's a bit of risk for you. But at least we've been very open and honest, and that price has been called. How that works with Astro, to be honest, quite frankly now, the price of Astro is completely irrelevant in terms of this calculation. What we do is we look at all of the assets within a protocol, which is never simple, quite frankly. So we've got liquid assets, and in the case of Astro, we've then got some illiquid assets that do pay an ROI. So we're working out how we account for those to make sure it's as fair as possible. And once we understand how many people have claimed, we remove any wallets that shouldn't be receiving drops. So I had a meeting with Daryl today to run through the wallets, make sure the right wallets are being removed and there's no reward. And basically that enables them to calculate how big is the pie and how should that pie be split. And obviously we run the process this way. This is our 8th gravity project. We run it to try and get you the best return possible, rather than we could just drop that cash to all wallets and some of those wallets have been forgotten about and they're never seen again, and you've been active right to the end, and that's dead money that could have been in your hands. So once we understand who's claimed, and we know how big the list of wallets and supply that have claimed is, and then we're able to do the calculations, which should be done within sort of probably the next 3 or 4 days, I think. But yeah, we keep you up to date. Cool. So where are the funds from 100 days going? How does the gravity project work? So yeah, I've given it's probably a good segue actually, because I think let me check there's no other questions about okay, I'm just getting abuse in there. Good. Yeah, so it's a good segue. So where are the funds from 100 days going? So the funds are absorbed by our protocol, and they're swapped for MDB tokens. We work through this claim process to try and maximize the amount of returns, and then MDB tokens are distributed. We use a lot of that. A lot of those funds is used to acquire the tokens that are then distributed, obviously, to holders. We don't have a magic MDB tree where we can mint tokens like some other protocols do. They have to be bought on the open market. and that's it. That's basically how the process works. So the whole design of Gravity, and where MDB is very different to other projects that have tried to do it before, is that we've got this deflationary system that's very true. And so therefore we're not saying, hey, give us 100K and we're going to go and, create these, I don't know, mining rigs or whatever it is, out of thin air. And basically we're just adding to the liability in the protocol. That isn't happening. It's only, our supply can only go down. It can't go up. And that's kind of how the process works. Hopefully that's answered your question. See if we get a yay or a nay. Somebody said, I don't know if I should feel happy or sad for being in the second Gravity in a row. Got mixed feelings here. And I think to make Pandu better. Yeah, look, the Millionaires Club I should mention as well. So we've got our private members club. You get access to the yacht club. You don't have to pay anything to be in there, but you do have to own a minimum of about $500 worth of MDB. That number changes. The number of MDB required gets reviewed every 2 weeks. Because I'm sure you can imagine, 4 months ago, $500 of $500 got you a lot more MDB than it does today. But if you join that club, you get access to project pitches. Often they give giveaways, whitelist spots. You also get access, and you've made me think of this, make Pandu better because you sounded a bit sorry. We also have a life coach on retainer, and she does at least one session a month around mental health, managing stress. There's a whole section in there. She's really good, actually. It's really cool. It's a stressful space, and maybe Pandu, maybe you could tap her up and get a bit of support through this difficult time. So there's lots of other things. There's lots of alpha in the Millionaires Club as well. You also get early access to products. So like they got Millionaires Club members got early access to MDB Plus, which is really good. They also get higher allocations for Infinity, for instance, and we'll always make sure there's some sort of recognition. But you own that supply. You can sell it and leave the club anytime. Nobody takes it off you. You just get a load of other benefits as well. So it's a really cool community. Also. I know, Pandy. I know. So, question: you mentioned third-party development company for smart contracts in case of a hack. Who is responsible, and what legal arrangements did you make in such event? So, look, our contracts are not managed by an external party. You can't mint supply in our contracts, which is one of the most common exploits. There's no flash loans. None of that is going on in our core contracts. So for us to be, and quite frankly, all of the LP is locked into multi-sigs as well. So if we get hacked or any money goes missing, it's down to me ultimately. I take responsibility as leader of the organization, and it'd have to be some pretty special operation to fool us out of the protocol's money. Cool. Good. So, any other questions on that before I just move on to kind of I think I've touched on it already because we kind of segued there from the questions. But is there anything sort of like pressing? And then what I'm going to really do is then move into maybe what's happening with the 100 days Gravity process, where we are, what's happening going forward, and then I'll just open up, and then those questions will take us through to the end. So someone's typing. I'm going to wait for a question. It's going to be a funny GIF, but let's see. One thing I would say, look, so in building MDB, one thing we recognize is actually community is like really, really powerful. And you see even projects, almost all projects have some level of community, some level of loyalty that sits behind it. And that's a really valuable asset. And similar to maybe sports teams where, win or lose, they have this core, group of people that will still travel the country to watch their games. And I feel like you get that in DeFi, but quite often I feel like that's exploited, if I'm brutally honest. And so one of the things that I really wanted to do was build a protocol where you could create another synergy where you could combine a protocol that is designed for longevity and to be fair for people, along with a really good community that really cares about the protocol as well. And all of those will be the winners, rather than one person coming in, one whale coming in, buying a load, dumping on everyone, and then everyone, being, left dead at the end of it. We designed the protocol to harness the power of those things that we see as super, super positive and quite often wasted. And it was a funny gift. There you go. Ravi's still typing. So Ravi, I'm going to cover the gravity process and let's see what's coming. So in terms of the gravity process, look, as I mentioned before, we did our first gravity on the day we launched. Actually, we've been doing it since day dot. It's been a learning curve for us, definitely, and we always saw it as a way of helping the holders, quite frankly. And as things have developed, we've seen also it provides help to project leaders. Very rarely do you shut down a project. People might have multiple projects, but still, what, you do it twice or three times, or and it's a very stressful situation, regardless of sort of like the feelings towards certain people. It is an extremely stressful situation, and that process becoming dysfunctional makes it an even more stressful situation for everybody. So one of the things with gravity is that we also offer a level of guidance, and we've developed a playbook as well for the teams themselves, so that they're able to execute it quickly. It's nothing worse than being in a difficult situation and getting mixed messages, uncertainty, not knowing what's happening, no leadership, no control, and so we work with the teams to deliver that. We'd received a message, I think, from Arsh towards the end of the week, asking for a chat next week. And that was, accepted, and yeah, let's have a chat. We didn't know what it was about. He reached out again, said, look, I've got some urgency, would really like to talk to you. So I made some time on Saturday, caught up with Arsh on a one-to-one basis on Saturday. He explained that he believed, there'd been a lot of challenges on his side. He accepted that they've probably made some mistakes, and they haven't executed as well as they'd want to. And said, I'd like to gravity. So then we deployed the playbook, and within several hours he'd made the announcement and transferred the funds. And that is, the process is as simple as that. By the way, we're not. I being very open. I'm a big F1 fan, and I was curious to see, well, what F1 software have you got? Is there some value there that you'd be able to leverage to drive value for the holders long term? The long and short of it is that Arsh's view that there wasn't any usable assets out of the assets that you're already aware of, and so the process is moving forward. So lots of people say MDB is buying it. We're not buying anything, or we're acquiring. We're not acquiring. Previous organizations' liabilities. It's just about bringing organizations together and offering a much better outcome than is quite often the alternative, and that's what we're doing in this case. So hopefully that gives you a view. In terms of process, Wallet Collect is already open. Please tell anyone you know that is or was. We want as many people to claim as possible. Maybe you don't, because the less people that claim, the more share that you get. And we remove all holdings that shouldn't be receiving a drop from that number. We look at all claims, and then we look at the total funds that have been acquired by the protocol, and then that is distributed in MDB tokens, equally dependent on your share. So if you owned 1% of the protocol, and after you've removed wallets and claims have happened, there's 50% of the Astro tokens to be dropped to, then you would have 2% of that pot. Hopefully that makes sense. But that's the process, and I want to see whether Ravi has managed to get his question out. No, there's more funny gifts, but no Ravi question. Cool. So you've had me talking at you for 40 minutes straight, so I apologise for that, firstly. How should someone new to MDB invest? I feel like that's a rhetorical question. Best way is through Xenia. You can buy on Pancake Swap, but buying through Xenia is by far and away the most effective way. We've got functions within a lot of our contracts where you can either use a swapper or send directly to the contract, and it returns the native token. And Xenia uses those functions. It's actually just an overlay of those functions. So if you were buying $30,000 of Phoenix Plus, if you bought $1,000 of Phoenix Plus on Pancake Swap, you'll see a lot of slippage because the LP is relatively small. It's really there so people can have a chart to look at because people like charts. But you could send $30,000 to the Phoenix Plus contract of BNB and you would get almost no slippage. It would be absolutely tiny. So always recommend that you use Xenia if you're investing. Put all your stables into Phoenix Plus. That's the simple thing to do. MDB is a token with high upside potential, but it does have some risk, right? It is an AMM at the end of the day. People selling impacts your price. People buying impacts your price as well. So it does have some inherent risk, but it does have that insurance fund backing it up, which is there to burn supply as quickly as possible. Okay. So flow notice. I was late to the MMA, so not sure if this was asked already. Will the fans of 100 Days be involved with MDB? I think, yeah, you probably got the answer on there. Yeah, we're not. I don't. I spoke to Darryl today for an operational call to go through wallets, and even he's saying that's it. He's done with DeFi, and I think some of the other guys. It's not for me to pass judgment, but clearly, I'd say it's probably fair to say they were maybe stretched in terms of what they were trying to achieve and maybe what they were in a position to do. So, there's part of the process isn't them coming to work for MDB for sure. What happens to Top Wallet Dumperoonie? How do I know the same thing 100 days won't happen to me here? So, by Dumperoonie, do you mean what if the largest holder in MDB dumped all of their tokens? I'm guessing. Well, I say Akosh is answering for Virgil. I think I know what Virgil means. Yes, there you go. Right. So the way our system works, if you dump tokens in really large volumes, it has an exponential impact on the market cap because the market cap is a duplicate of the LP basically. So if you have $100 in your LP and your LP is 10% of all of the supply, or paired with 10% of the supply, then your market cap will be 1,000, right? So if somebody sells $50, that's half of the LP, you're going to see the market cap drop from $1,000 to $500. So selling has an exponential impact on price because of the relationship between the two. Sorry if I'm teaching anyone to suck eggs. Now, the way MDB is designed is that the trust fund is much bigger than the LP, the protocol-owned LP, I should say, any point in time. There's the farm, which is separate. So therefore, if the LP was drained by huge amounts of sales, then in fact, the reverse would also be able to happen because the trust fund, in theory, could take, let me give you an example. Say, for instance, our market cap was 10 million, say, on the money, bang on 10 million. And the trust fund is 2 million. It's more than that, but let's say it's 2 million for round numbers. If you would see a 90% crash at that point, so at this point you've got sort of 2 million trust fund back in 10 million. If you would see a 90% crash in the price, then you would now have a million market cap, and the trust fund, in theory, less price impact and all of this, but these are the basics. The trust fund will be able to buy half of the circulating supply. So you would then have 1.5 million backing half of the amount of tokens. Less price impact. It doesn't work exactly like that mathematically, but they're the fundamentals of the system. So yes, of course, if someone sells, it has negative pressure. The bigger the distance between the market cap and the fund, that is a level of risk, naturally. But actually, if it started to get really, really low, then you'd be able to remove so much supply from circulation. In truth, long term, the tokens that are still held by holders that didn't sell would actually be better back than they were before that whale sold at 10 million market cap. hopefully that kind of answers the question. That doesn't mean the price will always go up, but it does mean that following that event, the ability for the protocol to drive price up has actually grown exponentially because the ratio of funds to supply has actually increased as a result of that one individual dumping a huge amount of supply. Hopefully that answers the question. And now they're talking about wiping on the toilet. So proud of my community. Yeah, look, I think we're doing a load of bite-sized stuff. So this week we're just like doing mini storyboards for like probably 15, 20 topics. And then we're going to start filming like really short videos that talk about tokens. So you want MDB Plus, we'll talk about the token. And we're also going to talk about how capital synergy works and how the math within that model really works as well. Because I think, yeah, and then we want to talk about the protocol, the revenue streams, and why it's sustainable, because naturally people shit talk in this industry and people say, oh, MDB's a Ponzi, and someone said that we're Thanos, which I think they meant Theranos, which I don't know, maybe is a coping mechanism, but our system is designed to be here. Theoretically it could run as a DAO and it would run forever, and the person who's holding last would be the richest person, not the poorest. That's the way it's designed. Real business revenue. Great question, Virgil, because I'm really buzzing about this at the moment because we've got so much going on in the background. I don't want to give people PTSD after probably the last 6 months, maybe of talk of real world revenue that hasn't materialized. But we've always had like to have something to deliver before we start selling something too much. That's very much our way. We are British, so by nature we're quite self-deprecating, and we've always had it within our roadmap to find B2B applications that can leverage blockchain technology and solve real world problems and scale, and scale in a completely different way, not like in a DeFi way, as in driving 100, 500 million business valuations. And I don't want to press on this too much, because I think, considering you've probably been listening to that for the last 5 months and you're here today on this AMA, I think I would much prefer, when we start releasing some details over the next few weeks, that you see what we're building. At the moment, we're mapping out an MVP for the concept that we've been doing research on. We're doing deeper research with business organizations at the moment. And then we should be in a stage where we're MVP before the end of the year. And then we're looking for initial launch of a sister business, real world business, standalone organization. And we'll announce kind of how those two work together in good time. Cool. Flow notice, I can't go back and explain the difference between MDB, MDB Plus, and Phoenix Plus with all due respect. So MDB is a token, MDB Plus and Phoenix Plus are stable backed assets. But I would definitely have a read up, look into them. And they are very different risk profiles. Stable backed assets can't depreciate. They can only appreciate, but then they're not going to times 6 in a month, right? Whereas obviously MDB has seen pretty good growth, but it also then has downside risk. So it's more of a speculation on MDB, albeit long term. It's designed to move in one direction over a long period of time. Cool. How long does the gravity process on average take from the close of the wallet spreadsheet, the 5 days until the airdrop of MDB? Typically very quickly, actually. Once we've got the data, it's just about setting that process up and executing the drop. We do some final checks just to make sure there's no mistakes. And, some people ask, well, couldn't we just sell our MDB? Absolutely. Our protocol is designed to feed off of volume. And if you want to sell, of course, it's going to bring the price down slightly. And if it's not for you, that's okay. We're obviously very sad, and we'd love you to be here for a long time. And I wish people would stop wasting the money on most of the projects that are around. If I'm completely honest, but if you want something else, then obviously you're free to go. Cool. Any new NFT projects in the pipeline beside EMP? Yes. Simple answer. We've got 2 other projects actually, but we haven't got details on those just yet. So it's all about EMP for the next 12 days. I know you went over the MDB trust fund the other day. Is there any way we can see all current investments? You can see it in the trust fund report, actually. In the Infinity Fund, not yet, because we're still going through some deployments, actually. And we will report on that in a slightly different way. There is a multi-sig address, albeit we've got some funds in an off-chain and we've got some funds in a, so we have like operational deployment wallets. It's not always easy to deploy from a multi-sig, but there is also a multi-sig for the Infinity Fund if you want to go and have a look. I think there you go. Thank you, Happy Peterson. Any other questions from anybody? 73 listening now. Wow. Look, I just want to say, look, from this I don't want to slag the industry off, but to be honest, in my time here, it's been a massive learning curve, and maybe that's exacerbated by market conditions being extremely difficult. I think everybody talks the talk, don't they? And it's whether they walk the walk. And we're genuinely committed to the future of our investors. We also, all have holdings and are not looking for sort of short-term returns. I think with all of our team allocations, we made a commitment as a team that we would lock them for 6 months. We're reaching that 6 months. Are we going to be selling? No. We're very early in a very long journey that we've got much bigger ambitions than what we're doing right now. Okay, so appreciate everybody that's taken the time to come today, and look, I know it's been difficult for some people. The community is, they're always fooling around, but it's a great bunch of people, and I'm always deprecating about the community, but actually, they know I love them, and I hope some of you stay for the long term, and we can look back on this as a fantastic turning point. The people, our first Gravity. They were times 6, times 7 at one point. They're probably times 4.5 now. So, they can sort of share their own long-term experiences. Stuff. All right. Cheers, guys. Thanks, everyone, for joining. Take care. Bye-bye.